And a very good morning to you, and welcome to the pre-market rundown for Friday, February 18th, 2022. I'm Andrew Horowitz. I am the co-founder of TriggerCharts. I'm so glad that you joined me this Friday and every Friday as we talk about all things related to the market, in particular, focusing on what's moving, some of the theory behind what's happening, some of the rationale reasoning, and the biases, the long, the short side. And obviously we know from over the last several days that things have been quite interesting, to say the least. Whereas we have a significant amount of selling almost on every situation that we see. We are going to talk about a lot of things. We're going to talk about many stocks and futures. We'll talk about your particular areas that you want to talk about as well. So make sure to put any of the symbols that you want to look at, whether they are futures or currency or ETF stocks, whatever they are, inside of the chat. And you can do that. We have a really nice group with us today. The thing we need to talk about for a moment is, of course, the disclosures that are there on your screen. And please note that everything we talk about is for educational purposes only. Investing involves substantial risk. And of course, there's no guarantee of future results. Whatever we talk about here today is not to be considered a recommendation. And I will underscore, underline, italicize, quote, and push that forward, that is absolute. Nothing we talk about is to be considered a recommendation. Do your own research before you invest. And by the way, before we get into anything more on that topic of doing your own research, it's really important to understand that when you utilize any kind of process, system, strategy, you need to test it out and you need to go slowly. A lot of people love to just get in there and start go. Let's make it happen. Let's put our money in. I'm going to make a lot of money because we're optimistic by our very nature, aren't we? Now, some people are pessimistic, but generally speaking, even the pessimists are going to think, hey, I'm going to do this and I'm going to make money doing that. So they're optimistic in their pessimism, if that makes any sense. What I want you to do is go slowly. Figure out what works. Figure out what you have we'll call it the rhythm of. Understand that these lines are meant to give you information about where it's long and short bias or consolidation mode. It provides you a really good guide and setups, but at the same time, you really should be understanding what's happening from a big picture as well. Not only from an individual stock standpoint, but also from the markets, because about 80% approximately of a stock's move up or down can really be attributed to what is happening in the markets. And we know that when we look at what's going on with stocks, the obliteration that we're seeing on many names right now, you have to say that a lot of it is due to the fact there's a lot of selling going on in indices and futures. Already we've seen the markets way in the green this morning. Right now, the Dow is up, 8 points? The AES up 5 and the NASDAQ up 41. Gold is flat, Bitcoin down ever so slightly, but it was a lot higher overnight. We saw that the NASDAQ was up about 150. The Dow was up about 175. And then it came crashing down very, very significantly. And when you look at those things, when we look at where we are with that, it really needs to be dealt with and thought about, okay, well, what is the bigger picture going on? On the bias side to the right here, we see that we are in a short bias. Clearly, the trend recently on the Qs is the NASDAQ 100 has been to the downside. We all see that, right? Very easy to see. Very big bias to the downside right here. And then we saw some consolidation between this area that was pretty wide, between about 340, 339 and about 357. And now we're starting to see a new altimeter form right here. 3 lines. The red, like we see here, right? The red, the blue, and the green. Unfair high, unfair low. And this is our point of control. That's what we call it when we consider this process. And when we look at market profile, which this whole area is considered a market profile, what we look at is where the action is, the volume, and the price. We put it all together, we package it up, find out where that line in the sand is. And right now, as for example, you can see that in this area here, it is no man's land. The opportunity to move down back towards the level that we see here, about 339, is very high because we do not have a lot of resistance. We do not have anything when we go and look left Always looking left. Really, it's a big issue, right? We always talk about that. Look left, look left, look left. And when there's nothing in this zone right here, and that's only through October, but we could branch this out a little bit more, I believe. We could take this down and look a little bit further. Where is the next point of area that we look at? Well, we have to look here. And that's why we drew these lines at 336 or so as the ultimate support point, which we did bounce off of that day back last month. So it's important to understand where the markets are. So let's talk about what is going on in the texture of what's happening. That's what I really want to talk about, this textural change in the market, where there was a time when we saw buy the dips and sell the rips. Possibly it was actually back then it was buy the dips, buy the rips. We've changed that dramatically. Now people are looking to sell the rips. Any opportunity to get out at a higher level, they'll do, and looking at the dips, just staring at them, taking their time to say, well, what's going on there? The fact of the matter is when we look at what's going on, it seems that there is this opportunity to be just patient. And people are really not going in both hands. Yes, we've seen a couple of days, one of them this week, that was just unbelievable, where we saw that markets took off when there was the thought that there was maybe a ceasefire or backing off or wasn't happening, or this whole Ukrainian and Russian situation that was going on. And maybe, just maybe, the recovery on Wednesday after the Fed minutes came out, where there was just not as much of a hawkish bent to what they were saying. But here's the thing that's going on that I think it's really important. Got a couple of spelling errors here. This should say then. So we see post-earnings. Right now what's happening? Shoot, then ask. Sell, then ask questions later. We saw that on Roku today. Outlook was light. A couple other measures were light. Stock down dramatically. 10% down yesterday, down like 25% plus or minus today. Draftkings coming out with earnings today. Down yesterday, down about 15, 18%. Shake Shack coming out with earnings, saying they're going to have to raise menu prices in March and that they're having some supply chain issues, a little bit of softening, down dramatically. Massive confusion in the markets. This is a big issue right here. You're probably feeling this as well. Massive confusion. Hey, for the last number of years, it's been all about waiting for markets to come down and then a giant V up like we saw here, right here. But what happened? We rolled back down again. And now the question is, where do we go from this position? Are we going to see this downstroke moving back down to the lows again and even possibly lower, taking out some of the levels that we see and the froth and the fluff? Very possibly. Or are we going to see us stabilize in this area? Because some of the things that are going on right now, like we're seeing the issue of the Fed and how abrupt they are going to be with trying to slow down the economy or to tame inflation. And then on top of it, how much is this going to be really impacted? How much are we going to be impacted by what's going on in Russia? Big issue. I think the Russia thing is a sideshow. This area is very important. We need to get above this area here in order to give us any kind of movement on the upside. And I guess what's happening right now is we're taking back the gifts that were given to us, the gift of all this money that was provided in the markets over the last year, where there's a lot less liquidity out there, a lot less money. And this stuff is moving very quickly on the top. You can see this. Once again, a lot of confusion. Last week we talked about these Friday moves that were first down, then stabilizing, moving higher on the open, then down again, and then finally flying up into the high on the weekend. You got to question whether that's going to continue today, that kind of pattern, because when you look at what's happening, the question about the potential for a weekend bombing, shelling, Ukrainian situation of getting crazy, that's very, very interesting. There's some misguided areas I want to talk about right now. This blind eye that is really becoming very pronounced in the markets right now. Yesterday on CNBC, ARK's Kathy Wood talked about my stocks are extremely undervalued with a 5-year time horizon. You know, what's interesting about that is many of these stocks haven't even been around for 5 years. 5 years. 5 years. No one can project, I'll even say, a year out. Companies have a lot of difficulty post-pandemic giving any kind of real level of accurate information about where we are. And I think when you really consider the boldness of Cathie Wood saying that she has a deep value portfolio right now and that there's a 5-year time horizon. I'm talking about also 40% annual returns that she will think that we'll get over the next number of years. Wow, what is that? Is that a person that is totally oblivious and misguided, turns a blind eye to reality? Or is that a person that is totally optimistic? Or is it a person that will be right? I don't know. Here's the point. Don't be that person. Don't keep on going in after every single opportunity of a dip just to keep on buying more and more and more and getting yourself into a hole where Cathie Wood is now down 60% on that portfolio. The ARKK is down 60% from its high, give or take a percent. Right now, we talked about this last week. I'm going to mention this again. Take smaller positions until we can see that things are getting just a little bit more organized and a little bit more on better legs. We are having a valuation change, possibly a reversion to the mean after we've seen that price earnings ratios, price to sales ratios have been out of kilter over the last couple of years. It's starting to come in very significantly. Now, where are we up? Talking, of course, the Fed is letting the markets do the hard work for them. We've seen that recently, and that is what's going on. The Fed is allowing for markets. They didn't predict any of the things that were going on. They don't ever predict. They're terrible at this. But they didn't predict the inflation would be not only here, but rising and unstoppable for the time being. They didn't predict that we would see a significant change in dynamic, that the Russian and Ukrainian situation would change so severely. They didn't predict the supply chain woes that we have right now, and the list goes on and on and on. Right now, the good news is that in a way, in a perverse way, the markets are doing the work for the Fed by raising the rates, and we see what happened with the 2, the 5, and the 10s on the rate complex, and that's very interesting. The 2s right now trading, let's go over to that. I think I left it up here. Yeah, 1.939, down significantly again today. So that's very interesting to look at, and I think that's something we really need to pay attention to. But when we look at that and we go back to the idea of what is the Fed going to do, how they're going to do it, how fast they're going to do it, it would seem to me unlikely unless things got really crazy, and especially with the things that we have in front of us right now and the way the markets have acted, that they'd be very hard-pressed to really slam the brakes on by doing a 50 basis point. I wouldn't bet on either side. I don't really have any dogs in this fight because I just wouldn't do it. We don't know where they're going. The fact is that right now, the market is faced with many, many different issues. We have geopolitical uncertainty, which is a real problem by any standard. And we also have the situation where right now we have a very bad concern about rising rates and how that's going to deal with valuations, and the concern about the outlook in terms of earnings. You know, when we have earnings that were up 80% for a company over the last year, and then 70% and 40%, now 30%, let's recognize something that's really important. And let's recognize that you can't keep 80% growth for years to come. Dell Computer was the greatest of all indicators of that. If they continued their pace back in the day of the rapid increase of PC sales, everybody would have had 4 or 5 PCs on their desktop at once. That didn't happen. It's not going to happen. We have to recognize that. Very difficult in this market, though, to be on the short side when we see these face-ripping moves to the upside. Very, very, very difficult for most people unless you have an absolute short-sided mentality. When you look at Roku down 50, 60% and then down another 20%, how would you get into and why would you desire to be ahead of the earnings move, and then once the earnings came out, just slammed down immediately? Interesting. Did we see a dead cat bounce? Are we there? Are we seeing this dead cat bounce that happened recently? Are we at that point? Who thinks that? Does anybody think in the chat? Tell me, was this a dead cat bounce, or was it just a move that just rectified the big move lower and we're going to consolidate for a while? Or was it a total fake out? We're going to see the next move much, much lower. Got to think about that. Well, if it is a dead cat bounce, then what we have is more lows possibly to make, and you have to deal with where you are accordingly. So, I do think, though, that with that in mind, I will share something. I think that fundamentals is really important right now. If you have good quality companies, you may be able to weather some of the storm that is here and is coming. And I've seen that. And a lot of the stocks that we have in our portfolios, for example, we have some flyers, some speculative ones that just totally got hit. And we have small positions in there. They still hurt, but small positions, okay? Because, not when I say small positions, 2% positions of a portfolio, not a lot of them. But still, when you add up like 3 or 4 of those and they're down 30%, 40% in an eye blink, that's painful, right? That's a few percent off your portfolio. But the rest of the portfolio, when you look at the massive amount of names that are high quality, that have done very well recently, it gives you pause that you want to look for things that are actually going to do well in the future. Just look at the energy complex. Done very well. We're in the SOH for a lot of people, and if not, you should really consider that. That's the sit on the hands. You don't have to trade if it doesn't work. Don't take your stock portfolio down heavily without recoverability. Always want to be able to have dry powder to make things work for you in the future. And that's why in most of our portfolios that we manage, frankly, non-stock related, but more diversified ETFs, et cetera, those are holding up pretty good. Yeah, they got hit. Everything gets hit. There's nowhere to hide right now, but okay. Nothing terrible. And then we have a lot of dry powder to work with. So we have a higher than normal cash position in all of our portfolios and have that for a little while now. Economics, PPI was hot. Employment was in line. Housing sales stable. Next week, we have GDP, the second reading on GDP. Not a big deal. Case-Shiller's coming out the last week of the month, I believe. Where are we? We're in February, so it's the last, let's see on my calendar here. Yeah, next week's the last Friday. We have a couple more days. The 28th on a Monday is the last day of the month. So we have the weekend, next weekend, and the weekend after, the day after. We have Case-Shiller Consumer Confidence. We have new home sales, PCE prices, the preferred measure by the Fed of what it is that they're seeing in the inflation market. So something to consider, and also durable goods. I'll mention this. I'm going to talk about this as well. You have to pay attention to this if you are new to our discussions this morning. Anyone that is a subscriber, and a new subscriber at that, send a note into support@TriggerCharts.com, and we will send you a 4-hour complimentary free $199 value course in the area of what we look at in markets on technical analysis, on charting, on trading. It's an evergreen series that we did a few years ago, and it just holds up really well and something that you want to take a look at. Now, we talked about all of these names last week, and a lot of these were movers beyond belief. The software names in particular got whacked pretty hard. But we looked at some of these that also did pretty well. We'll take a look at that right now. What I wanted to do is I want to talk about some of this right now. So off of the lows, this is our this is McClellan. I'll kind of bring this into the similar concept of where we are. Markets now in equilibrium as we see it. So that means basically that markets currently in shorter-term trend, it's equilibrium, so the shorter-term trend should continue. Where is that shorter-term trend? That's the big question. Looks to me, like I said, a downtrend. Now, you could say that somewhere, we got this up that moved here, but then we broke down. We broke this line over the last few days, heading down a little bit maybe now in the ES in this morning. We move. And where are we? Is there support? I mean, you could draw just a simple line there, but that's way down. That's at 4,300. But when we look at the Spearman, which is important to look at, negative 769, after popping up dramatically, double top that we saw right there on the INX, the S&P cash. So that big move down, oversold dramatically at the end of January, did pop up. Where are we now? Getting into the oversold again. A non-complex, I would say above zero on the McClellan, heading a bit lower. Not a good look. Just not a good look. Not a good look. The other thing I want to show you is this. Yesterday, 2,500 stocks down, 300 or so stocks. What does that say? No, 800. 800 stocks up. The moving average, when we look at the 200-day moving average, we have 213 stocks below the 200-day moving average, and we have excuse me, above the 200, this is above the 200-day moving average, and below right here is 289. So, what we're seeing right now is that we are finding more and more stocks are crashing through their technical levels that a lot of people look at. Moving along, let's take a look at some of the stocks that we're looking at and some of the names that are just ew. Facebook. Look at this 30-minute yesterday tail off towards the end. 210.02 is where we saw that there was that level of support that we looked at because we went back some time, all the way back. I think we even looked on a weekly. We're seeing that the aileron, which is a separate package that is available, is still not looking so good. It's still below the zero line. Trend is lower. Just nothing good. Affirm, just obliteration. Pure and simple, ugly, nasty. I think there's an opportunity for a bounce here. I don't know when that's going to come. It just seems like again, yesterday, just look at this tail off yesterday. Started out, it was looking okay, and then just tailed off throughout the day. This is a darling of the buy now, pay later. Got a great boost when Amazon was involved, and got a great boost when a few other names in the NFL recently, and then staircase, boop, 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 up, down, up, down, up, down, all the way down here. This seems to be at a level that something to look at and just keep your eye on. DWAC, this is Trump's Truth Media platform. Again, that 87.36 is very elusive. Hasbro, the toy maker, broke out very nicely last couple of days after. This is the kind of thing you need to watch for. We're starting to see this gigantic consolidation. Look how wide this is. This is really important to note. I'm going to draw a box here. I love using the box. And the reason why I'm doing this is because I want to look at the width of this particular setup. So when we look at the aileron, the wide 87 to 99, look at the difference in how wide all these other ones. If you take this and drag it and try to match it up, nothing fits. There's no large, even over here is double the range. When you see double the range like that, anything can happen. Wide and loose is the movement that we're talking about right there. Something to really keep in mind overall. The Qs down slightly today. Again, we just looked at that. Downstroke. At the end of the day, as the war was possible, I guess we're getting the kick out of this right here as well today. K-Web, I've been talking about this. Hit resistance yesterday. I said this is an interesting place to look at as a canary in the coal mine. If we can break above, maybe China's got something going where they're getting a little looser on their overall real estate deals. There's not much problems. Maybe they'll put some stimulus in. They'll tighten up. But again, everything is floating a little bit lower these days just because it is. Roku, just horrible. Now, this stock annoys me. This stock was a darling. We saw a double top right here. Everybody was bullish. I don't think anybody had a negative rating on this. And this talks about analysts, or I'll call them analists, with their heads right up their tuchuses. This is a problem where you didn't have any opportunity really to do anything if you were following just only the fundamentals, because analysts were just giddy about this stock all the way, down to, well, overpriced. Maybe here, but wow, look at the value here. And if you loved it at 200 or 350, you're going to love it at 214. Well, now you're going to love it at 106, down 26% today. Off chart, we call this, down all the way right there, below where it was. Let's look at this weekly for a second. And this is going to look pretty astounding. We're talking about this stock. Where does it go from here on a weekly basis? 124, below that. Next stop, really of decent support, 75. Now, does that mean it's going to do that in a straight line or even do that? I don't know. But it just crashed through the 128, and that's pretty disturbing. Very disturbing that it crashed through that 128 line. Draftkings, same kind of look. Again, we do this daily. It doesn't matter if you do daily, weekly, monthly. It's all the same. 5-minute, doesn't matter. 30-minute. All this information is exactly the same. Colors are the same. Red means, hey, do not be long. Green says, do not be short. There is a bias. That doesn't mean you have to necessarily go long or short. Remember that. It's a bias, a trading bias. That's what it says here, trading bias on the top. And by the way, this gives you all of this. When we look at this, DraftKings, it said short on a 30. Short, what do we have here? 60 right now. 240 is blank. Daily is blank. There was no good trade here. Whereas on Qs, we got a short alert on the weekly. We got a short alert on the daily, and we've seen the short build here. Whereas on GDX, look at the difference here. This is the gold miners. On the gold miners, been long, 4 bars, 1, 2, 3, 4 on the daily. You would have got long somewhere right about here at 32 and been at 34 up again today in this horrible circumstance of a market that's going on right now. Right here, shorts on space, just obnoxious. I like this way back, but it was a trading position. This is an interesting stock. Finally came out of its shell. It got a really good move the other day. Traded up yesterday, then down to the low. Right now, we got to get above this level, the 155 level, I'd say, and I'd really like to see it above the 175 before getting too involved in this. Yields are down again. That tells you that something's going on. Gold not moving very much right now. Another stock that just I want to kick myself. I saw this in the 600s as a possible short candidate. It was moving too wildly. The opportunities were there, very short-lived, but a wild move, very thin. I don't like thin, wild moves. This was really the place to be shorting, 550. There was nothing to the left. There was some possible consolidation that we saw to the left over here, but really below this level. When you look at this on a weekly basis, like I said, this is where it started falling off of a cart right there. You had a bit of a consolidation here, but 613 also down to 538 was an area of interest. Trying to move very fast here. What else we got? Paramount, a lot of people were very excited about this. I said recently, and this was just total anecdotal, and this was nothing to do with anything at all, but the fact was that it stinks as a platform. The Paramount Plus, they suck you in, they give you lousy movies, not much there. Some stocks that you mentioned here. Antero Resources, any of the resource companies are really doing very well. You can see that the trend has been holding very nicely. Down a little bit today. You're probably going to see some problems as, let's see what crude is today. Crude is down 2% today, which is interesting. You would expect crude to be up a little bit with the fact that we're seeing a sell-off in this side of it. Let's see what Deere is. I'm kind of curious. Deere came out with earnings today, holding on to 385, so it's holding above its unfair low, which is interesting. Seeing a little touch of a move to the downside here. VIX, we saw this move. Here's something important to notice. On the VIX, I think we have to recognize something, and we have to look at this, that once you're over the 25 level, really over the 20 level, but we'll go to 25 right now, 25 level, and let's kind of just tag right there. Once you're over there, you got to really worry about the fact that you're going to see wide and loose moves. That is really what the VIX is telling you about the projected volatility over a number of days, and that's really important. And I think that when we look at where there is a significant amount of volatility, that's where I'm going to say it again because I really want you to pay attention to this, is that you bring down your trading size. Don't be a wildcat and just say, you know, this is down. Let's look at Draftkings. Look at this. They're coming out with earnings. Let's really load up on it because it's in a consolidation. How much lower can it go? It's down pretty significantly right there. So just be careful with that. I think it's something you really need to pay attention to. You know, how much lower can it go? This looks oversold to me, but that's another story. But you have to wonder, you know, how much lower can it go? And if it does come up, where does it go? Could this go back up to where it should probably be on an overbought side? Probably if it heads back to 54, that's a big move from 37. What's the big change? Yes, there's a regulatory insight in it, but you got to realize that some of these stocks are the darlings from once upon a time, and people still love them. Listen, I'm going to end right there. I want to thank you all for joining me, and I'll see you again next week.